all the market action of the day. Not a very great start to the week at all, as all the major indices declined in trade, falling by more than 1% in the closing session. So, mid-cap index was the clear major loser here. The index dropped about 2% by the end of the day in closing trade. Bank Nifty was down by about 460 points. Let's straight go across to Surabhi Upadhyay for the key highlights of the market action. Surabhi, clearly bulls didn't have a very great day. Hangover there?
Surely not a great start to the week if you are a bull, because the market is now threatening to break a 1.5 months long trading range. Today we had an all fall down day. It sort of started weak from the word go, and the selling kept on accentuating with absolutely no buyers in sight. The net result was the Nifty and the Sensex were down a little over 1% each, but it's the mid-caps where the real pain is getting felt. A lot of mid-caps, particularly companies where there is leverage involved, where perhaps promoters have pledged their shares, that's where there was some heavy-duty selling going on. Just coming to the examples today, if you talk about the Nifty itself, it's so across the board, it's cutting across sectoral lines, barring IT actually, most other sectors were feeling the heat today. So look at the list of losers. Adani Ports, losses in double digits on some of these big stocks coming through. Indiabulls Housing, Bajaj Finance as well, down almost 6 to 7%. Yes Bank, Ultratech Cement, it's pretty much across different sectoral lines. Heavyweights also weren't really offering too much of relief to the bulls today, whether it was RIL or ICICI Bank, which was down almost 4%, or SBI, or even HDFC for that matter. Lots of weakness on these big names as well. What gained? Very few stocks really on the green side. Bharti Infratel's outperformance continued even today. TCS saw some takers, and L&T had a good show in the third quarter. The stock closed up about 1%. Now let's come to the active part, of the action-oriented part of the market, the Z Group. Very divergent trends across different stocks. So Z Enterprises, or Z Entertainment, beg your pardon, was up almost 15%. Dish TV managed gains of about 6 to 7% as well, as did SL Propack. But then there was Z Learn, Z Media. These were stocks that were down quite a bit even today. Let's come to the mid-cap action and the so-called carnage. I'm talking about stocks like HEG, Graphite, IOL Chemicals. These are commodity plays where the tide seems to be turning, and there was some intense selling going on today. Adani Power, along with Adani Ports on the Nifty, was also down quite a bit. DHFL was a weak name. Coming down to earnings, lots of disappointment across the board. Walkard, Piramal Enterprises, Canara Bank, and even good numbers like Shriram Transport Finance or Escorts for that matter. There were absolutely no takers, and all of these stocks were down. What gained? I don't have too many gainers today on the mid-cap list. HDFC Life, Arvind and Sun TV. All-round weakness, extremely critical day, and we need to see if this is a range breakdown happening or whether perhaps the bulls will try and stand back on their feet tomorrow.
Okay, Surabhi, thanks for taking us through that comprehensive route of the market action. But let's get the stock-specific action then. After a dramatic sell-off in Friday, what wiped out 14,000 crore rupees in wealth, there was some respite for the promoters of Z Group. Today, the company's lenders have agreed to give 3 months more to the promoters to find a buyer for the group's flagship company, Z Entertainment. Shares of Z Entertainment and Dish TV bounced back in trade today, soon after the extension by the lenders. So there you go, Z Entertainment, Dish TV in the green, but Z Learn was in the red. As I said, other Group Z companies remained under pressure. Mangala Malu is here with more of the details. Mang, first, a very quick background and to the deal that has been struck with the lenders over the weekend and what it means for the group.
Absolutely. So all SL Group stocks were in trial on Friday's trading session. After that, there were a lot of conversations that the management had with investors as well as lenders. And today, there was that con call that spoke about the deal that the management had with the lenders. In that con call, there were a couple of things which were discussed: the group debt, loan against Z stock, strategic sale, and the agreement that the company had with the lenders itself. So let's talk about each issue separately. So first one, on the promoters' debt concerns, they did not reveal the absolute number. They said they're not at the liberty to share the group debt, but they are in default as of Friday's close. The news piece that exaggerated the fall that we saw on Friday's trading session. Deal with the lenders, that is a big positive, because they said the lenders will not sell shares even if the value declines going forward. In fact, if you take a look at the time frame that they've had with the lenders, and it's not a soft agreement, it's a formal written agreement that they've had with the lenders to not sell shares, and this time is beyond April 2019 to repay debt, or rather not sell their shares. Why is April 2019 important? Because that is when the time of the strategic sale ends, and why is this important? Because all the lenders who owned or hold Z pledge shares, promoters owned about 41.6% in Z Entertainment. If you take a look at Dish TV, 60.8%, City 72.2%. All the promoters' stake, majority of the promoters' stake is pledged, and pledged shares being invoked is something that caused the stock price to decline. In fact, the promoters on the loan against these stocks said most covenants of loan against promoters' stake have been breached. That is number one. Number two, they 60 basis points of the promoters' pledged shares was sold. So the promoters' stake, which in the previous plate stood at 41.6%, has now come down to 41%. But the important part, going forward, the promoters will not pledge any further stake if the share price falls down. And finally, talking about the strategic stake sale, they said they're re-engaging with potential buyers to sell the company's stake. They have bargaining power given there are multiple buyers and there is no hostile takeover situation. So that is a positive. On the back of that, brokerages have written. Now, Edelweiss has said that, the volatility will continue. So they've cut their target price, whereas ICICI Securities, they've put both Z as well as Dish TV under their coverage or under review in terms of their coverage. They do not have a buy or a sell call on the stock, while the other brokerages, the likes of CLSA, DB and Nomura, have various reasons to believe that the story for Z continues to be positive. So they have a positive rating on the stock, but volatile times likely to continue. Z and Dish TV were in the green because those are the two stocks which are covered in the agreement with the lenders. All the other group companies saw a fair amount of selling.
Okay, Mangam, thanks for taking us through that. So it's going to be a tough road ahead, but some kind of respite coming in for lenders and for the stock. A fresh twist in the sale of debt-ridden Ruchi Soya, India's largest manufacturer of edible oil, is saddled with a debt of a whopping 10,000 crore rupees. Now, Adani Wilmar was declared the highest bidder, that is the H1, 5 months ago. But will the deal not be completed? Sources say Adani could likely withdraw its bid, opening the doors for another suitor, Patanjali. Ritu Singh is here with the details. Ritu, Patanjali was the second highest bidder when the deal was in talks. Lenders are meeting today. What changes are we expecting?
Well, Adani Wilmar was selected as the highest bidder for Ruchi Soya under the insolvency process back in August of last year. And since then, the case has not found closure. It is pending clearance in the NCLT, following which we understand that Adani had conveyed its displeasure and cited these reasons which have caused a deterioration in assets as per Adani Wilmar as the reason why it now wants to withdraw its bid from Ruchi Soya. This is not the first instance where we're seeing the highest bidders backing off, and it's not really a good signal for the banking industry. Now we understand the lenders of Ruchi Soya will be meeting today to take stock of the situation. So with the highest bidder out of the picture now, and we understand that Adani will officially withdraw its bid today, the second highest bidder, which was Patanjali Ayurved, perhaps may be given a chance to bid for the assets, and they've made their intention very clear when it comes to Ruchi Soya. Patanjali very much is interested in acquiring the asset. Remember, in the last round, Patanjali's offer overall actually was higher than what Adani had bid under the Swiss auction method, but Adani's payment to the lenders was higher, which is why their bid was selected over Patanjali Ayurved's. Now we understand that Patanjali is also willing to match Adani's bid if given a chance. So all of these things will be important factors that the Committee of Creditors in its meeting today will consider and perhaps give a fresh chance to Patanjali to make its bid for Ruchi Soya.
Okay, Ritu, fair enough. But before we let you go, you've also been speaking to other sources in the public sector bank list about their wish list for the upcoming budget. What are their expectations from the Finance Minister?
Well, first and foremost, it's always, recapitalization for public sector banks, something that, the bankers look forward to in union budgets. In this vote on account as well, bankers are hopeful that the next tranche of PSB recapitalization may be announced. Remember, almost 1.06 trillion rupees have been infused into the public sector banks in FY19. But besides this, of course, there are some other important things that banks are watching out for. One, banks have sought GST rationalization on bank accounts. It's also possible that this demand may be taken up by the GST Council instead of the Finance Ministry. Second, they've sought a uniform stamp duty across India for documentation along the lines of GST. Third, the Deposit Insurance and Credit Guarantee Corporation, which covers the depositors of public, that coverage they seek should be enhanced from 1 lakh to 5 lakh rupees. Additionally, they've sought reduction in the tenure for tax deposits under ATC to allow, to make FDs a more attractive scheme for savers to come forward. They want the tax deducted at source limit for public to also be raised from 10,000 rupees to 30,000 rupees annually. And they have sought some subsidies to open rural ATMs or branches in rural areas because, banks do not get as much business out of rural areas, and they wanted some support from the government to open new ATMs. Also, they've sought, approval to raise tax-free bonds in order to support the infrastructure lending, something that the government has also really been pushing for.
Tata Steel has sold a majority stake in its Southeast Asia business to China's HBIS Group. The company has sold 70% stake but has also decided to retain 30%. The HBIS Group is one of the largest steel makers in the world with revenues of about $50 billion. Kevin Lee is here with the details and on the assets that have been sold and the reason behind it. Kevin, take us through the contours of this deal and, what's the broader picture here? Tata Steel has been looking at selling Southeast Asia operations. They've been consolidating operations. What does this mean for the debt picture?
Well, like you said, for 6 months now, Tata Steel has been looking to sell off its Southeast Asia operations. This is because the EBITDA per ton in that region is very low. It's about 1,600 rupees per ton compared to around 8,000 to 9,000 of what it gets in India. HBIS, consequently, has been facing a slowdown in the Chinese market, so is looking to expand. So it is actually a match made in heaven in that regard. Like you mentioned, they're selling 70% of the stake. They're keeping 30% in case there's any upside. The management clarified today saying that it will keep this 30% stake for at least another 3 years before it decides whether or not it wants to monetize it through an IPO or another route. Talking about the assets, there is Singapore-based Nat Steel and Tata Steel Thailand. Both of these will be transferred into a holding company, and Tata Steel will hold now 30% of that. The enterprise value of the holding company is expected to be around $685 million, out of which $150 million is debt. Tata Steel is going to get $327 million from this stake sale, which it will use to pare down its debt. Also remember that because that $150 million of debt was on its books, that will automatically be deleveraged as well. So Tata Steel clearly looking to deleverage now and divest from non-core assets.
Okay, Kevin, thanks for taking us through that. Here is Tata Steel's TV Narendran on the reason behind the stake sale and the decision to hold 30% in the Southeast Asia business.
HBIS was keen to build a partnership with Tata Steel, and Tata Steel also felt that we can optimize the value by divesting 70% now and holding on to the balance 30% so that we can take the benefit of any upside, if any, over the next few years.
All right, staying with budget expectations, Yash Jain has been speaking to various players in the insurance sector, and there is a heavy list with respect to life and general insurance. He's here with the details. Yash, what is the insurance sector's wish list?
Well, Kritika, like every year, of course, every sector and businesses have lined up their expectation, and the life and general insurance space also have an exhaustive list when it comes to the interim budget. To start with the life insurance space, and particularly to start with the pension portfolio which they have, the first thing is that they've sought a complete tax-free treatment when it comes to the pension which is received from the pension portfolio by, of course, the policy holders. The second one is to make a separate segment under income tax exemption for essentially the pension portfolio, just on the lines of 80 CCD, which currently exists as far as NPS or the National Pension Scheme is concerned. The logic here is, of course, to get the pension portfolio of insurance companies at par when it comes to the National Pension Scheme. Apart from that, they've also sought a separate exemption under the Income Tax Act when it comes to the premium which is paid towards pure term or protection policies. Third, of course, with respect to the ambitious plan of Ayushman Bharat, they seek further clarity in terms of fund infusion as well as way forward on that particular plan. Coming to the general insurance side, of course, very interesting demands here as well. The first thing is that they've sought a mandatory home insurance when it comes to the loans which are given out, the home loans which are given out. The premium here, according to their logic, should be deducted from the EMI of the home loan. If there is no home loan component involved, then in that case, from the property tax component. The last, of course, health insurance to be made mandatory by employers for all their employees. And last but not the least, of course, there are reports which suggest that there could be a fund infusion, a recapitalization for the very first time in PSU general insurance companies. There's always a plan to merge them and again then list them on exchanges to shore up the capital and improve the solvency margin.